Here's a very simple way to understand candlesticks in trading for beginners. So, a candlestick is basically just one bar that shows you how the price of an asset has changed over a certain amount of time. So, here's the deal. This thing shows you the open, high, low, and close for that period of time. Neat, huh? Every candlestick consists of a body and a wick or shadow. So, for example, if you see this green candle right here, here's the open price, which is the price your crypto started trading at that time frame. The highest price it went to, the lowest price it touched, and the price it closed at. And bearish harami candlestick patterns happen when an upward or downward trend is about to end. They usually mean that the trend is reversing or changing direction. Traders love the bullish harami candlestick because it helps them identify a bull market and make profits. Once they're confident that the pattern is legit, they close out some or all of their short sell positions and start a buy position. Now here's how you can identify the bullish harami candlestick. This pattern we're talking about is the opposite of the bullish engulfing pattern and involves not one, but two candlesticks. First, you got yourself a big old red candle. Then, you got yourself a green candle that just kind of sits inside the red candle's body. And this is basically why it's called harami, because it means pregnant in Japanese. It's important for the body of the green candle to be completely engulfed by the body of the first red candle. You want to wait for a breakout above the high of that right candle to happen, and then jump in with a long position. Place your stop loss at the swing low of the harami pattern, and then, for your take profit, take the distance between the entry and stop loss and double it. And voila, just wait for the magic to happen. By the way, the bearish harami is the same exact pattern, but in reverse. The hammer and hanging man candlestick patterns happen when an upward or downward trend is about to end. They usually mean that the trend is reversing or changing direction. So, check it out. Crypto traders love the hammer candlestick because it helps them identify a bull market and buy crypto. Now here's how you can identify the hammer candlestick. The hammer has a small body on top and a long wick below, indicating that buyers have become stronger in the market before the candle closes. Note that the lower shadow should be at least 2 times the height of the real body. So here's the deal. Traders usually chill and wait for the confirmation signals to show up before they hit the buy button on a long position after the hammer candlestick. To get the most out of our trades, we usually use Bing X as our exchange. In this example, you want to see that the close price of the next candle is way higher than the hammer's closing price. That's how you know it's a confirmation signal. You want to place your stop loss just below the body of the hammer and give it a bit of cushion. And for your take profit, you gotta use other types of candles or analysis cause hammers don't provide you that. By the way, the hanging man is the same exact pattern but in reverse. Of the gravestone doji. Now you could easily mix up the doji candlestick with the hammer candlestick. However, a hammer candle has a long lower shadow that is almost twice the size of its real body. It usually appears after a price decline, signaling a potential upcoming reversal. Alright, so the doji candlestick isn't exactly the greatest pattern for giving strong buy and sell signals. However, it does a pretty good job at pinpointing those moments where the bulls and bears just can't make up their minds. Evening and morning star candlestick patterns happen when an upward or downward trend is about to end. They usually mean that the trend is reversing or changing direction. So check it out. Crypto traders love the evening star because it helps them get out of a bull market and keep their profits. Once they're sure that the pattern is legit, they close out some or all of their position and might even start a short sell position. Now here's how you can identify the evening star candlestick. Alright, so we've got this big old green candlestick that pops up first. Next thing we know, there's a little green one with a tiny body. And then, lo and behold, a third candlestick appears. The goal is to have this guy close up shop past the halfway mark of that first big green candlestick. So when the third candle is done, put your stop loss on top of the wick of the second candle. Then, for your take profit, take the distance between the entry and stop loss and double it. And voila, just wait for the magic to happen. By the way, the morning star is the exact same pattern but in reverse.